You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean only one thing. It is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Yep, it's time once again for TWIFO, This Week in Futures Options, a program where we break it all down on the futures options side of the fence. If you like what you hear, this show, our network, make sure you leave those reviews on your platform of choice so new folks can continue to discover our content in these trying and troubled times. Pleased to see so many new folks just join the network week after week. We want to keep that flow going. Also want to keep providing that reliable source. You guys are demanding a lot of content from us these days, but we're happy to oblige. So if you like what you hear, make sure you keep those reviews coming so new folks can continue to have a safe and secure and reliable place to turn to from an options content and financial content perspective in these troubled times. And, of course, keep those questions coming. We do love to hear from you guys as well. Let's see who we're hearing from on the old program today. First off, holding down the FTSE Russell hot seat yet again. It's been a remarkable track record for him, a remarkable series of appearances in the FTSE Russell hot seat. Once again, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell, a.k.a. the Oprah of this show, always on the cover. Mr. Sean Smith, welcome back to TWIFO, sir. It has been too long.
It's great to be back. It's great to be back, Mark. It's going to be a great show. I'm looking forward to it, Mark. Thanks for having me.
I like that comparison to Oprah, the big O here in Chicago, sir. At least she used to be.
It's good. It's good. I love bread.
Yes. You get a car. Do I get a car now because I said that to you? That'd be kind of fun. You get a car, and you get a car, and everyone gets a car. Let's see who else gets a car. Holding down the CME Group hot seat today for a nice return appearance. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. Rockingest of Lobsters, welcome back to TWIFO, sir. It has been too long.
It has been too long, but I think I've been doing Option Insider Radio network shows, and I know you're a big behemoth conglomerate now, for almost 10 years. Never once got offered a car. Just saying. The relatively new guy, though, from the FTSE, because he's FTSE big time, he gets a car. Me, nothing. No car. I'm just saying. I'm starting already.
I wasn't saying you got umbrage already. Here you go. Show hasn't even started yet. I wasn't saying I was giving him a car. I was saying because he's Oprah, we're all going to get cars. That's what I was saying. So I was roping you in there. You know, he's giving out cars now. That's his gig. He's Oprah.
You're just trying to cover. You're just trying to cover. That's all I'm saying.
Once again, sir, you have misinterpreted me, as you did recently on the old option block when you tried to say buying puts was a line in the sand puts. But I digress. We'll talk about that in another segment. First off, let's break down the hot action. What was lighting it up over there on CME this week? The movers and shakers report for this week. By the way, you guys, as always, can play along with the home game, cmegroup.com/TWIFO, TWIFO, or also /TWIO, This Week in Options. They both work. So head on over there, generate your reports. You want to set them for today's date if you want to see exactly what we're talking about today. Otherwise, have at it. Generate them whenever you want. Just like this, you can see what's been moving since our last show. This goes all the way back to the end of our last show, listeners, what's been lighting it up. Since then, Mr. Rock Lobster, as our quote-unquote guest, I guess I have to call you that. I'll give you pride of place, even though you give me a hard time about cars. Where should we begin our journey this week, sir? To the light side or to the dark side?
I think we should begin it to the, since I'm generally a dark side person, let's try the light side. Let's just try it on for size and see how it works. But
he wants a car.
He does. He's angling for the car.
Wants a car, obviously.
See, this guy gets it right away. He gets the show. He gets, he understands. He understands the flow.
I have to say, you threw me for a bit of a loop there. I did not expect you to go light side. I just, knowing you as I do, you're kind of a dyed-in-the-wool dark side kind of guy. But hey, I guess anyone could change their stripes. Maybe Sean's right. Maybe you are angling for a car. Let's see what our light side has in store for us this week. By the way, this week, listeners, it is a markedly biased week on the movers and shakers report. If you run it for yourself, you'll see it's pretty much all green all the time. You're hard-pressed. You can find about 5 dark sider, but beyond that, you can't really fill a top 10 with dark side this week. Not a lot of red on the screen. What is there, though, is pretty pronounced. We'll get to that in a second. But first, to the upside we go. Number 5, soybean oil, up 5.25%. It's been a variety of soybeans on this list pretty much every week. Soybean meal. This week it is soybean oil, up 5.25%. Worth noting, it does some paper, 48,000 contracts. So maybe if we have some time today, we could drop in on the old soybean oil. Can't remember the last time we did that on the show. Number 4, Brent, up 8.1%. You're going to see a bit of a theme here, listeners, for the rest of the upside. Just warning you. It was number 2 to the dark side last week. It was off about 7.75%. So quite the swing in the energy complex this week. I think you guys probably all know that unless you're living under a rock right now. Number 3, heating oil, up 8.54%. It was number 5 to the dark side. It was the bottom of our dark side last week. It was off about 6.25% last week. Number 2, good old RBOB. Getting the theme here, up 9.92%. That was number 3 to the dark side last week. It was off 6.88%, so a huge swing in RBOB. And then number 1 to the upside this week, listeners, your favorite, one of our perennial stalwarts here on the old program, WTI, back in the hot seat with a bullet to the upside this week, up almost 10%, 9.96%. This week. It was number 4 to the dark side last week, off 6.84%. So another huge swing in WTI as well. Let's now turn our attention to the dark side. Number 5 to the dark side, lumber. Off not quite 2%, about 1.86%. If you recall, last week it was our number 1 dark side mover. In fact, the last couple of weeks it was number 1 the last 2 weeks, I believe. Last week, it was off about 9.33%. This week, taking a bit of a break, only off a paltry 1.86%. By the way, we talked about lumber before. Not a huge volume product from an options perspective. It was about 70-odd contracts last week on the tape. So we probably won't be hanging our hats on lumber this week, but an interesting contract nonetheless. It's also worth noting it's a big meaty contracts, $600 contracts. So if you're off a couple of percent, let alone 9.33% last week, that's a big move. So that's worth noting out there, even if the options aren't enough to really sink our teeth into. Numero 4 here, we got rough rice off 2.16%. It was number 9 outside of our top 10, number 9 to the light side last week. Number 3, iron ore off 2.53%, also outside of our top 5, but number 7 to the dark side last week was off about 2.8%. And so similar weeks, 2 weeks in a row here for iron ore. Numero dos here, back in our movers and shakers report. It's been a while since we talked about Eurodollars here, off 9.09%. Last week was number 6 to the dark side, so it's been outside of our top 5 on either direction for a while. Usually Eurodollars was kind of a perennial contender here. Last month or so, not so much, but maybe back in our rotation this week as well, off 9.09%. Last week was off 4.25%, but not enough to break into the top 5 to the dark side. And number 1 with a bullet this week, kind of bucking the energy trend, nat gas. Taking a break this week, off 9.29%. It was number 1 to the upside last week. Now, again, standard caveat applies. This is a pretty cheap contract, so it's not hard for it to have a huge percentage swing week to week, which is kind of why I take it with a bit of a grain of salt. It's certainly no lumber. It's not $600. But still, it's worthy of note out there because it's kind of bucking the energy trend this week. Mr. Rock Lobster, I know you guys like to hang your hat in equity, and we'll get there in a second, but I think we kind of have to start with all things energy. It is just blowing up. Would you concur this week, sir?
Yes, because I've been a little early. I'm going to say it maybe a lot early in energy stocks.
You were a big believer in those energy stocks for a while there, sir.
Yes, and the tire tracks are still deeply embedded in my back. So as much as I like to say every trade I do is great, sometimes I just sit and suck on them and keep rolling puts and stuff like that, which is what's happening right now. So I, for one, am quite thrilled that crude oil is up 10%. So I can at least look where my head might be above water. I'm still drowning in a sea of crude, unfortunately. But as far as, this is what I'm figuring out, like, isn't everybody going to figure out pretty soon that we're going to need oil and gas and stuff like that? So I can't tell if this is seasonal, like dollar going down, this or that. Maybe you guys can illuminate me. But what's with the sudden interest? Like, I keep looking at crude as a proxy for Corona going away, and every time I think it's going to happen, it just plunges me back down the deep, dark well of oil. So I'm happy and thrilled that it is moving in a green direction. But as with this Corona thing, generally these rallies in energy have been short-lived. But that's where I am right now. But quite thrilled that it's happening today.
You know, if you had tuned into TWIFO, let's say, I don't know, 6 or so months ago, we could have saved you a lot of pain, sir, because we would have told you that the skew was not exactly favoring a big rally north of the 40 handle. And it hasn't been for quite some time. So we could have saved you a lot of money, Mr. Rock Lobster, if you just tuned into the show week after week, sir.
Well, now I'm going to tune in because it would have saved me a lot of money. I just call myself a Dumas for not tuning into the show.
Yes. Dumas. I like that term. As we move on into, let's see exactly what the heck is lighting it up out here in this just explosion of upside. You guys, as always, cmegroup.com/TWIFO or /TWIO. Get that drop down to energy, then pull it on to WTI, and you'll see exactly what we're looking at out here. A hot and heavy week out here, 434,000 contracts on the tape as of a few minutes ago. If you're wondering how that breaks down, let's see. Previous we had 306,000, so that's a lot of paper on the tape this week. Let's see. The most active month, or I should say the most active contract out here, is the October contract with exactly 0.01 days to go. So going to be kind of hard to parse that one, listeners. About 30.2% of the paper going up out there this week, which is kind of interesting. Again, putting a bit of a nail in the coffin of this. People won't trade short-dated crude. They clearly will. Just not if you list it as like a weekly. But this October monthly contract that has less than a day to go, people are trading it up. So there you go. People will trade short-dated crude, just not a listed weekly. We've talked about it many times. I don't know why. I've asked millions of people that question, why that is. We've heard many different answers on this show. Go back into the archives if you want to dig in for yourself. But today, 30.2% coming in this October contract. Since it is going the way of the dodo very shortly. We'll have to come back to that for a second. Let's go on out here to November instead. Hot on its heels with almost 30%, 29.8% going in November. So not exactly a slouch here either, and a little bit easier to parse the skew and the vol here because it has a whopping 28 days to go. That's a little bit more reasonable. So let's hang our hat out there this week. The vol in this October contract, first off, that contract is up a whopping 10.15% just since the beginning of this week. So 41.5 is pretty much where that contract is hanging out right now. The vol out there coming in pretty aggressively, 33.5. That's off 15 1/3 handles since last week. So I guess this rally north of the 40 handle, folks taking some of that vol off the table pretty aggressively. Let's look out here at the skew action. Last week, the puts were bid 10.7% to the at the money. This week, they are bid 18.3%. So we've said it before, we're saying it again, once it gets north of that 40 handle, folks seem to get a little bit skittish, a little bit squeamish, and that seems to be the case. These puts getting themselves some juice. The calls, let's see. Oh, same deal. Calls don't seem to get any love north of that 40 handle. That seems to be the case this week as well. The calls were 6.8% cheap to the at the money last week. This week, 16.2%. Now, some of that's coming from the vol coming off pretty aggressively. Some of that, of course, I'm moving up the skew a little bit, but still. Calls are offered and the puts are bid fairly aggressively out here. Looking like an equity right now in WTI. Let's see what the most active contract was out here this week. If you said the 35 puts actually in December, you would be the winner. So even though we were looking at November, Dees was where the most active contract was. The 35 puts doing 12,500 this week. The lion's share actually today, 6,500. So someone piling into these 35s today. Interesting. As we're continuing our rally north this 40 handle, maybe someone saying, hey, this is a chance to get in on these Dees puts and fade this WTI at a pretty aggressive level. Either way, someone getting a lot of these puts going here. 6,500, over half of the volume this week. Going up today, 3,100 yesterday, 2,200 on Tuesday. Not a lot going up on Monday. Outside of the Dees, though, we got to go back here to November, and that's where we're hanging our hat here for the November 43 calls. That's more of a strike than I expected in the Dees 35s, but hey, I'm open to being surprised here on TWIFO. Week after week, I usually am, with some of the strikes that are lighting it up. November 43s have 11,000 and change going up this week. The lion's share also today, 6,200 of these bad boys. Worth noting also about 6,200 of the 45s going up in November today, so maybe a bit of a vertical, 43, 45 vertical. Either way, those two strikes hot and heavy today with 6,000 and change. Today's just a big day in WTI regardless, listeners. Let's go back to the 43s really quickly. We saw 2,700 on Tuesday, 1,400 on Wednesday, and about 700 on Monday. So again, the lion's share is today. So earlier in the week, we saw opening paper on these 43s. Today's numbers, we don't know. And then the 45s also hot and heavy with 9,300 contracts. Again, the lion's share, 6,000 going up today. So it'd be an interesting vertical if that was the case, 43, 45. Not particularly wide, not a lot of room to run or a lot of premium to harvest if you're selling it. So it's an interesting choice on the vertical front, if that is indeed what's going up out there today. The rest of the week on the 45s also pretty light, about 1,100 on Wednesday and about 2,000 on Tuesday. So today is where the action was on the 43s and the 45s. Those are also our number 2 and number 3 contracts out here this week. But whenever we're talking WTI, we like to look a little bit farther out and a little bit farther away. By the way, also the 40 calls that are going out in about a minute did pretty good paper today as well. They have about 9,000, almost 10,000 on the tape as of a few minutes ago. So those calls that went out this week did a lot of paper here. Let's go a little bit farther out to see if anything weird or aberrant is on the screen. Yes, we have the 60 calls. So it's not all fading all the time. Of course, these could be overriding, listeners. The Dees calls in 2021, so going out a year and change, pretty active this week with a total of 4,250 on the tape. Today, about 2,000. So again, today is just a lot of paper going up today in WTI. 128,000 of that 434,000 contracts. 128,000 of that going up today. So big day in WTI today. Let's see, 1,950 of those Dees 2021 60 calls. Easy for me to say. Going up today. 1,700 yesterday. 500 on Tuesday. Most of that opening. So it looks like opening paper on the 60 calls this week. Similar numbers on the 50s as well in Dees of 2021. So maybe some opportunities for some verticals. A 50-60 vertical, I can maybe get behind a little bit more than a 43-45 right now, particularly that far out. You want to give yourself a little bit of room to run if you're buying it. Let's see, 1,200 of the 50s went up, as well as about 1,200 on Wednesday as well. So a total of about 3,000 of the D's 2021 50s versus about 4,200 of the D's 2021 60s this week. So maybe some ratio verticals going up out here, or just some interest in upside calls. Either way, D's upside is where the action is. Mr. Rock Lobster, we parsed a lot of interesting trends out here. Vol getting annihilated in WTI this week. Calls getting annihilated, puts getting bid up. So not exactly a strong argument for continued upside in the near future, as well as some funky strikes lighting it up out here. Anything catching your eye or on your radar this week from a overall WTI or crude oil perspective outside of the tire tracks of your energy stocks, sir?
Well, it just fits. It fits the thesis of every time oil rallies, everybody comes in and sells the crap out of it, and they bury all the calls, buy the puts, and then the rally goes away. So it's kind of like with vol. VIX isn't really going to go below 21 as long as COVID's around, and maybe oil doesn't go above 40. That's going to be the law, and until something changes, I think we're just stuck with that.
Yeah, that certainly seems to be the case. You know, another rally above the 40 handle, that's pretty much going to be faded, and that's, I guess, the deal again this week. So I guess short answer to the question, are they fading this rally yet again in options land, listeners? Yes. The short answer is yes. Not a lot of love for this one as well. I think you've listened to this show for a while. That probably won't come as a big surprise to you when we see this, market change out here. That will certainly be interesting. When people are bidding up these upside calls for size and selling the puts, that will be something to watch, something to keep an eye on. And we'll certainly let you guys know about this. What's driving all this action out here in WTI this week? Well, a lot of hurricane action in the Gulf again this week. That's a big driver for WTI. About 27% of the offshore oil and gas rigs in the Gulf of Mexico were shut down as a result of this latest wave of hurricanes spilling into the Gulf. As if 2020 wasn't crazy enough. Pandemic, civil unrest, all of the west coast of the country is on fire, and we have hurricanes just piling into the east coast all week long. So far, 2020, a banner year for just about everyone out there. Also, if that wasn't enough, we also saw a surprise drawdown in crude stocks out there from the EIA. So that combo shutting down a lot of production out there, as well as a bit of a surprise drawdown in crude inventories, that's enough to give us a little bit of a lift. But of course, maybe if it's a lot of this is hurricane driven, you can maybe see why folks are fading this in a little bit of the longer term. Interesting stuff out there. Let's turn our attention now to another interesting sector out here. That is, of course, all things equity volatility. Another crazy day out there in the equity landscape. It started off blood red, and it seems like that has pretty much continued and just exacerbated itself coming into showtime. We're seeing most of the major indices well in the red here. Dow, the laggard, off nearly a full percent now. It has lengthened. It was off about 0.75% earlier in the day. S&P off about 1.4%. It was off about 1.25% earlier in the day. And the NASDAQ closing in on 2%. It's at about 1.9%. To the dark side, it was off about 1.75% earlier this week. Not so much on the small caps. They are a bit of a laggard today, off only 0.75%. So I guess if you want an index that has been moving to the beat of its own drummer, certainly this week, then RVX, I should say, small caps is delivering. RVX is the VIX of small caps. That's at about a 30.25 coming into showtime. It puts it down, about 2 handles from our last show last week. VIX coming into the show is at about 27.25. But again, if you don't like that, just wait 5 minutes. It'll change. That puts it off about a little more than a handle, about 1.25 handles from last show. And the VVIX, which is the volatility of volatility out there, was at about 104, about 103.75. Puts it down about 15.25 handle. That's quite a bit from our last show. It's been, north of 120 for some time out there. So going down to near the 100 handle, maybe vol quieting off for a little bit, but I don't think we can expect to see that for too long. That puts that spread coming into showtime, that spread between small cap vol and large cap vol at about exactly 3 points. That's the tightest we've seen it in some time. That's about 0.75 of a point tighter than last week, and it's about 11 points tighter than it was couple of months ago when we were north of 14 out there. That spread got crazy wide for a while out there. And if you're wondering, our latest addition to the Vol family, at least over here in CME by way of NASDAQ. Vol Q, Vol of the NASDAQ out there at about a 34.5. That puts it down a little over a point from last show, about 1.1 points. All right, Mr. Sean, that's a lot to unpack here in the small cap and the equity space. Obviously, a lot has been happening since our last show, so catch us up, sir. What's been lighting up your tape out there in the land of Russell 2000 since the last time we chatted?
Well, the spread here has come in quite a bit, as you said. We're looking at approximately exactly 3 points. I'm not surprised. You hear the Fed say they're going to keep rates low for an extended period of time, and you also hear our government, the House and the Senate, talking about another incentive package, economic incentive package for the COVID crisis, and the word small businesses keeps popping into that fray of discussion. That all bodes well for small caps, right? So that's probably why you don't see that acceleration to the downside here, because there is some good economic hope for small caps and incentives here in the U.S., which is, Russell 2000 is primarily a domestic index. So it's really interesting. There's lots going on with Russell, FTSE Russell right now in regards to defining our classifications. As you know, we are in a sector environment, but we are going to an industry classification methodology at Russell, and soon to be FTSE indices as well. So what's happening? I always talk about sectors on the show, and that is watch healthcare. Russell 2000 is not so tech weighted as it is other areas. So there are currently nine sectors in the Russell Global sector methodology that we use. We're going to 11 industries rather than 9 sectors. So there's going to be 11 categories rather than 9. So what does that mean? That means we're taking real estate out of the financials. So you're going to see real estate. We're taking telecom out of the utility sector. So we're adding these two industries to now, instead of 9 industry categories, we're having 11. And when you think about telecom, think about it this way. Think about telecommunications equipment, and think about cable companies like Comcast. So those types of stocks are going to be beefing up the telecom industry component of the Russell 2000. So interesting things going on, and how we're looking at industry, trying to clearly define industry going forward. So with that, I definitely want to have more discussions on what drives small caps from that discussion on future shows. And I've got some great ideas for some guest speakers to come in and join us. But really interesting times. Let's talk about trading. It's roll week, right, at CME Group, and volumes have been like crazy busy in the Russell 2000 this week. Some days have had north of 500,000 contracts trading in a certain day, rolling from Sep to December. So great liquidity, tight bid asks in the rolls. It's been I think for all traders, they're having a great experience getting their positions rolling from September to the December contract. So interesting times, and they're doing this in a pretty volatile market. So really, really interesting times here.
We could spend quite a bit of the show talking about what's driving that small cap out, because we have got a lot of questions on that. It is certainly an index that has moved to the beat of its own drummer, even just over the course of the past week. So we got a lot of people hitting us up about what's going on with small caps. Why isn't it moving in lockstep with everything else? I think some of that rotation you mentioned there, Sean, is certainly at work out there. That's fascinating in and of itself, kind of rotating the sectors a little bit. We all get so focused on just tech and tech and tech, but there are other sectors out there, listeners, and they all have interesting things to offer out there. So interesting to see how a little bit of a shakeup going on over there in Russell 2000. Let's see what's shaking it up on the options front over there at CME. We said it before, we'll say it again. Out of the money puts seem to be the order of the day, and that seems to be the order of the day and indeed the week out here. By the way, small caps coming into today's show on the week. So remember, this week in reports start from the beginning of the week and go till now. When we do the scan, it goes all the way back to last show. But this week, we're talking about this week in, and it's up about 3.3% on the week, coming into showtime here at about 1542 in that Russell 2000 out there. And if you're wondering, what was the most active options contract out here on CME? If you said 15 half calls, I wouldn't blame you. In the weeklies, those are going out right now. Those are pretty active right now, but that's not number one. No, it's the week 3, the week 3 in November, 1090 puts. Lighting it up out here again this week. I'm not sure why that is, what the fascination is out here with these puts, but they did a big block of 1,500 alone just on Tuesday of this week with more paper scattered therein. So 1090 puts are where the action is out there in the Russell 2000, which again kind of just reinforces what we've seen out here time and again. Out of the money, not that far out. These only have about 65 days to go. That's pretty short, actually, compared to some of the other puts we've seen. But very far out of the money, over 500 handles here. So that's kind of been someone out there, Sean, on CME, likes themselves some far out of the money puts, and that seems to be the case out here again. Mr. Rock Lobster, I know when you're not chatting with me on these shows, you hang your hat in a little bit of equity volatility. So a lot's been going on since the last time you were on the program. Catch us up. What is lighting up your tape across the exploding world of equity volatility, sir?
And it is exploding, exploding. For some reason, I'm thinking of Lucy and saying, remember Ricky Ricardo saying exploding. The thing is I think part of the thing now is that the VIX futures are so expensive because that back month vol in SPX is so expensive that like VVIX is starting to come down because there's already so much premium in the future. So, hey, I want to buy a 27 call in VIX for October. You would think that it would be a reasonable price. And you're like, oh, hey, 27. Oh, no problem. October 27 VIX call. Let's see how much that's going to set you back. $5.40 for 20. Look at it. There's only 27 handle on the product. And the October 27 called $5.40. So I'm just saying that's not cheap, right? So, for VVIX point of view, VVIX doesn't need to be that high when the future's already $5 over cash. So I think there's that thing going on. NASDAQ vol has been, it's the most volatile I think I've ever, besides the COVID apocalypse. All these stocks are trading at, they would be at a 4 or 5 year, 10-year high in vol if it wasn't for the COVID thing, where they are right now at near all-time highs. So, you have to weigh these things. This is pretty expensive stuff, vol-wise. And normally, liquidity providers don't make stuff expensive for a reason, right? People are buying options. So the Grenada vol has not gone off from the drawdown we had in early September here. So from both of those point of views, we got catchy new products now for looking at, what do we have? VolQ, kind of a catchy name. Easy way to follow vol. As far as index for vol and just trying to get a baseline number. But like I said, you look at this thing, and under any circumstances, this would be extremely high vol, except for the COVID era. And the Qs are still trading 267. It's not like they're, where they were. But, and it's here for a reason. What that reason is, to be honest, I don't know. It could be election, COVID, whatever. The fact that the Qs are driven to all-time highs, I would say pretty expensive prices given current prospects. So just vol is up there. It is expensive. The futures are up there. Everything is just priced at a premium. Usually when stuff is this expensive and there's not a lot of current underlying vol, we will see something kind of blow up. So, if you keep that kind of in your, in the back of your mind, I would expect those things to happen at this point. Don't know why or where or how it's going to happen, but it's all pretty darn expensive. Like I said, under any normal circumstances, this would be viewed as pretty insanely high volatility. So I would just say, listeners, just, well, maybe oil does look good because it's just unvolatile at this point and everything else is really volatile. So I think that's where we are in term structure wise. You've got a lot of vol in the futures because volatility is acting, I think, like a giant earnings cycle in the SPX because of the election. You're going to have similar Greek functions. Black-Scholes kind of breaks when you have a one-day giant move. The market tries to price that by jacking the implied vol up really hard. And I think that's what we got right now. So what's going to happen? I don't know. But all I know is the vol continues to catch a bid. It doesn't really go down. And it wouldn't surprise me to see lower prices in Q stocks, over the next couple of days. I got to be honest.
Sounds like you're intrigued by this new Vol Q product, sir.
Yeah, I know. This is the thing about VIX and VXX. Like I say, they've been around and they haven't died. It's like it's hard to get a new vol product, have it trade, have an underlying and all that kind of stuff, and have it just live because of the nature of what volatility is. It's not a total slam dunk to make these things. So hopefully, like I said, and even for the MIAX, hope they get their thing going. But yeah, you gotta get that underlying listed, man, in order to trade the options on it.
Yeah, I mean, look at RBX. We talked about it many times here on the show. Unfortunately, it is still just an abstract index at this point. It's not tradable. It was tradable for a while there. Go back to the archives of our Volatility Views program, listeners, if you want to go back to those glorious halcyon days when you actually could trade Russell 2000 volatility directly. Right now, though, it's still in the future. Hopefully, I don't know, Sean, you've been working diligently behind the scenes. Any scoops, any nuggets, any updates you want to leave us on the prospects for a return of RBX anytime in the future, sir?
What I can say is the more client demand we can muster up and send to our friend Mr. Rick Rosenthal over at CIVO Global, the better. I know there's a strong desire. The products take one, the client demand, two, the liquidity, and three, the ability to spread the risk, right? So there's a couple of equations that probably need to be solved, but I'm very optimistic that a Russell 2000 volatility index future will reappear. I can't say when, but I'm very, very optimistic for its return. Let's put it that way.
I like that. I like to hear that, sir. And our listeners, they're often optimistic to get some rates on the show. A lot of folks want more rates on the show. I know Mr. Rhodes, whenever he's on, he wants to do more rates. This is the week where it's kind of hard to ignore them, especially the big dog out there in CME land, talking Eurodollars, of course. Number 2 to the dark side out there for us this week, off 9.09%. It was number 6 the week before. Like I said, it's been outside of our top 5 or bottom 5 for quite some time, but it's back in the crosshairs this week, doing some serious paper, too. We talk Eurodollars. You're talking some paper to the tune of 1.8 million contracts on the tape. Nothing else we're going to talk about here in CME land's really going to rival that anytime soon. We're talking about contracts before that are doing 40, 50,000 contracts across the entire complex. Now we're coming into Eurodollars here, which are kind of right now on the week, kind of fractionally unched. Kind of depends where you look, where on the term structure, how much they're off, slightly off, a little bit longer term, slightly up, a little bit near term. But still, about 21% of the paper came in the DEES contract for this year here. And if you're wondering what the most active contract out there was, it was the 99 and 5/8. I just like saying that out loud again. It's been a long time since we talked eighths and teenies out here. Still alive and well out there in Eurodollar land. That strike, that put, I should say, doing 97,349 contracts. So more than some entire complexes, 2x, 3x some entire complexes. And that's just in one put option out here in Eurodollars this week, listeners. So Eurodollar is a different beast when we're talking paper, when we're talking volume. Talking volatility, it's not that much of a vol play, but still, it's got a little bit of juice to it. About 16.25 is the at-the-money vol in that DEES contract. Off about half a point, so the vol coming in, obviously, we had the big announcement this week, so that's going to take some of that event risk off the table. But still, it's not quite, it's no 3 volatility like you're seeing out there farther along the Treasury curve out there. So there still is a little bit of juice, a little bit of life to the Eurodollars out there. In terms of skew, not a lot changing out here this week. Again, this is a big contract. It takes a lot to move things. The puts last week, 9.7% rich to the at-the-money out here in DEES. This week, 9.9%, so a little bit bid up. And the calls, 7.9% cheap. This week, 7.2% cheap. So an interesting equity, almost volatility skew shape out here in Eurodollars, at least out there in December. Let's jump around a little bit, see if any other big prints are really catching our eye out here. 99 5/8 on the puts. Well, if you want to also 99 3/4 calls, also pretty darn active. That whole little strip there, 5/8 to 3/4, pretty active on the calls and the puts. 99 3/4 calls doing 95,350 contracts. The lion's share on Wednesday, 48,000. By the way, the 5/8 puts, they had their big day on Wednesday as well, for obvious reasons. 62, almost 63,000 contracts trading just on Wednesday alone. So the paper we're talking about out here in Eurodollars, enormous. And 43,000 of that was opening, listeners. On the call side, a little bit smaller, about 4,600 opening. So a lot more churn and burn on the 99 3/4 calls, but still huge amounts of paper, no matter where you're looking at. Let's go a little bit farther out. The par calls, the 100 calls, also pretty active out here, with the March 2021 par calls doing 64,000 contracts this week. Let's go a little bit farther out just to see if any other interesting and or aberrant prints lighting it up out here. 99 1/4 puts going out to DEES here as well, doing 22,000, so still pretty active. For most complexes, that would be pretty aggressive. By the way, obviously they have a variety of different contracts out here in Eurodollars, listeners. You can scroll for days. If you just get your feet wet in Eurodollars, probably stay with the view that they give you on the cmegroup.com/TWIFO. If you hit select all, like I like to do, that's a lot of paper to really, it might be overwhelming when you're talking about Eurodollars out here. So maybe keep it small to start, and as you start getting a little bit more acclimated to the product, you can start looking at some of these calls. Those same strikes, 99 5/8, 99 3/4, 100, pretty active throughout the term structure, going all the way out to 2021 and beyond. Pick your month, and that's kind of where a lot of the action was out there. And for decent size, Mr. Rock Lobster, I know you don't hang your hats in the Eurodollars too often, but anything out here catching your eye? Are you surprised that the vol is as high in the Eurodollars as it is at 16 1/4? Or is that kind of what you expected?
Overall, no, I am a little surprised because, like, what's going on with rates? Like, didn't the Fed just kind of put the slap daddy on rates right now all of a sudden? Like, they're going to be the same forever.
Yeah, they kind of did.
Just put the kibosh on everything.
So, yeah, the fact that they're as juicy as they are, that kind of surprised me a little bit.
Yeah, it is a little surprising. Like, what are they expecting? I mean, maybe after today they take them down, but, I mean, at this point, I think the Europeans have just bludgeoned everybody into zero interest rates. I think that's part of one of the problems, right? They're like, we're gonna try this until we just make everybody miserable, I guess. I'm not quite sure what they've been thinking, but hey, I guess money's free as long as you print it, and then it won't be free anymore. So we'll see what happens.
We will see what happens indeed. We got a lot of other complexes to get to, but we also got a lot of you listeners we want to get to as well, and we're coming up against it. So without further ado, let's head right on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your segment, the Futures Options Feedback segment. First up, Mr. Sean, we got a question and maybe a bit of a request here from Teleni. Hope I'm pronouncing that correctly. Let's go with Teleni. Why not? They want to know, is there a schedule for future webinars by FTSE Russell? I particularly am interested in skew discussions and the impact of COVID-19 on volatility. Thank you. So kind of a two-part question there, Sean. First off, do you guys put out a schedule ahead of time of what you're planning to do on the webinar front? If so, Teleni would like to see it. And then B, what do you have to say about his or her requests for some topics for future webinars, sir?
Great question, Teleni. And the answer is yes, there are going to be future webinars. And the answer is yes to the second half of your question. Will there be a discussion about volatility and skew? You know, we work very closely with our derivatives exchange partners when we put out these webinars to, one, really educate our audience, that being you and lots of Mark's clients that like to listen to these webinars. And it's also to raise awareness of the products and the liquidity and the ability to actually trade in large cap and small cap stocks, that being the Russell 1000 and the Russell 2. But in regards to your second half of the question, we're working really closely with Cboe Global right now to come out with a really interesting Russell 2000 small cap discussion on, again, harvesting volatility, trading that skew. And it's going to be coming in the next month or two. So I look forward to making that announcement. We have other fantastic webinars coming in the very near future. I can't give you the schedule because we're trying to lock down the speakers and the times and the content at this point. But yes, the answer is yes. There's more coming from FTSE Russell on the educational webinar front.
And if they go to that FTSERussell.com/webinars, they can find all the previous ones as well, right?
Absolutely. They're all there. All you have to do is go to FTSERussell.com/webinars. And if you want to look at those, there's tons of content on the FTSE Russell website in regards to volatility of the indices, and also the new ICB, the industry classification benchmark transition that I mentioned today earlier in the show. It's all there on our website. So please go there and have fun with all the information. And again, reach out to me if you need any of that information, and I'll post my email address at the end of the show again.
There you go, Teleni. Hit up Sean directly with your webinar content requests. Maybe, he's a nice guy. Maybe he'll make it happen. All right, next up, we've got Mike, just straight up Mike. Mike says, seems like gold is also pretty favorable for collars right now. This has been kind of an ongoing discussion with our audience. They want collars. They want favorable collars. We talked about it a lot recently. It does seem like ags are usually your safest bet if you're picking a complex, but a lot of ones will have moving skew on the commodity front, and gold is one of those, Mike. Gold will swing all the time. Obviously, what you want in a favorable collar setup are very pricey calls and very cheap puts. Let's pull up gold right now. CMEGroup.com/TWIFO, drop down to metals, go into gold. Let's see if you are correct, sir, Mr. Mike. And I'm looking at it right now, and I could see making an argument for this, especially if you go a little bit farther out. Right now, the near-term calls are kind of bid up, but the puts in the near term not that cheap. But if you go out to 2021 in particular, it looks like February and March in particular. March, the calls right now are 13.2% rich to the at-the-money in gold, and the puts are almost 7% cheap. So if you want the best collar setup just in terms of straight up skew, that's all I'm looking at is percentage skew right now, March seems to be the place where you want to hang your hat right now. So I could maybe see an argument for that. Mr. Rocklops, I know you like to look at a little bit of precious metals. Vol, your friend over there, the greasiest of meatballs, was writing up a lot about gold vol of late. What are your thoughts on gold vol in general now, A? And B, do you agree with Mike, and maybe it looks like some of our analysis here that maybe this is a decent time for some collars, particularly a little bit longer term in gold, sir?
I have to admit, gold is looking a little peaked. Normally it's a momentum product. It's a commodity, and when it doesn't have the momentum, it just starts to just sputter and peter out. So, just the way I look at it now, it's just, it's just not going anywhere. And I think we were looking for tons more stimulus, tons of this, tons of that, never really materialized, and gold really hasn't seen those numbers since then. So I just think this is, gold, it gets real exciting, the gold bills get excited, and then it kind of quiets down, and then the vol just kind of gets sad. And I think that's where we are. I think collar-wise, yeah, collars generally are better in gold just because there's some upside skew, and the puts are generally cheap. So I don't think it's a terrible idea, actually, to be honest.
Yeah, if you're going to get into gold right now, a collar, obviously, listeners, long the underlying, short the covered call, long the put. If you're going to get into gold right now, it's hard to argue against some sort of downside protection anyway. So it's nice that that's a little bit cheaper out there in March. And the calls, you're actually going to pay for a good chunk of that put, maybe all of it, maybe a little bit more, depending on what strike you're looking at there. These are just a straight up 25 delta call, 25 delta put. You probably want to play a little bit with those strikes. But depending on how you do it, you're going to probably get a free put, maybe even get a little bit of a credit here on this, which is not a bad thing. So yeah, Mike, it seems like gold right now shaping up to be a pretty decent collar candidate as well. LTC, he's following up on our discussion we had on the show last week with Mr. Rhodes there. He wants to know, so let me see if I have this straight. If I buy corn calls and then a massive truckload of corn won't, in all caps, show up at my house. I love the show. Yeah, I think you're joking there a little bit, LTC, because yes, that's what we were joking about on the show last week. There are people who have this misperception of these commodity contracts. If they trade these things, all of a sudden there's going to be a huge truckload of X showing up at their door. Corn, soybeans, crude oil, whatever it is, whatever they're trading, they have the fear that a huge amount of this is going to come and just be dumped on their lawn. We kind of put the kibosh to that last week. Check it out if you haven't last week, for a lot of the reasons we highlighted, of course. The options, of course, will expire before the futures usually. And even if you're trading the futures, your broker is probably going to stop you on a retail account before it gets to that point, or at least notify you to say, hey, what do you want to do about this? Because you're going to have to take delivery. And then B, if you do somehow have to take delivery, it's going to go to a warehouse. It's not coming to your house. You're going to get a bill for all that good stuff for storage. That's another beast entirely, but it's not going to come and be dumped on your lawn. So all those out there who have this fear of truck of X coming to your house, let those fears fall by the wayside. Here's an interesting one, timely one coming from JLS. I'd be curious to get both of your guys' thoughts on this. JLS says, "Hi, TWIFO team." Well, hello, JLS. What do you think about Treasury bonds? This article thinks that options traders believe higher Treasury yields are coming. Includes a link to, I believe this is a Reuters article called "Are Higher Treasury Yields Coming?" Options traders bet yes. Now they do cite our old friend the Flowmaster here at the Trade Alert, so take it with a bit of a grain of salt. A bit of a dubious source. I'm just kidding. We love the Flowmaster and all things Trade Alert out there. They talk a little bit. They're not talking about the straight up Treasury options though. They're looking here at the TLT, which is of course the iShares Treasury bond ETF out there. And they say put volume out there is at the highest it's been in some time. Now, I think they're looking at it from a very specific lens. 1 month put to call ratio out there, the highest level it's been since the beginning of the year. That's interesting. If you know me, if you listen to the show for a long time, I don't put a lot of stock in things like put-call ratios. I don't think how useful they are in aggregate. We've talked about it before. We use order sentiment and things like that to analyze individual trades on shows like the Odd Block or the Option Block and the Odd Block segment. But in aggregate, I don't put a lot of stock in put-call ratios. And it sounds like this reporter was just using the Trade Alert platform and found this and then wrote up a whole article about it. I don't think Henry and the Trade Alert team hit him up about this because I think they have the same view that we do. But still, it is interesting, worth noting. Obviously, Treasury is going to have a bit of an inverse relationship out there, so they're betting on a bit of a near-term downside. I could certainly see maybe there's some interest in that, but I don't put a lot of stock in very near-term options flow in the 1 month or less on TLT. I don't know. Mr. Rock Lobster, you use TLT a lot more than I do. What are your thoughts here on this article? And do you put more stock in the put-call ratio of TLT than perhaps I do, sir?
Oh, my gosh. Put-call rate. Actually, to be honest, I rarely look at that. I mostly just look at, okay, what are they buying? And I would be like short-term. I can see short-term treasuries rallying into an election uncertainty. That could be why there could be a bid for some calls, but I mean, it's sort of weird. Like that's where the gravity's pulling everything. So, just follow the freak out. The freak out is until November 3rd, at least until something changes. So it makes sense that the bid for all that stuff would go that way. I don't see, but buying a lot of puts right now, like the Fed just said, like where are rates going? So I think it's hard to believe that TLT, a year and a half ago, maybe, what is it, December of 2018, I think it was like $110, TLT. So don't be surprised. Don't be too surprised by what treasuries can do.
It is funny, you don't put a lot of stock in it. I don't put a lot of stock in it. I don't know many pros who really hang their hat on put-call ratio. It does seem like a lot of the financial media and a lot of the public love to talk about put-call ratio. It's one of the more frequently cited options indicators, and yet I don't know anyone out there in the quote-unquote industry who really puts a lot of stock in that one particular indicator. Yet it keeps getting brought up, and Reuters bringing it up here again. So yeah, I don't think we put a ton of stock in that. I like looking a little bit farther out on the term structure. I like looking directly at the Treasury options themselves, whatever you want to look at, 3-year, 10-year, wherever you want to go out there in the actual options. It's like looking at a USO versus a WTI, right? You want to go straight to this horse's mouth whenever possible to get the purest indicator. Then I'll start breaking down the skews in these various contracts out there, and that'll tell me a little bit more than what the front month of TLT is telling me right now. But interesting nonetheless, if you're interested in treasuries, check it out. I think they also talk about an interesting trade here of treasuries versus Russell 2000. Weirdly enough. So an interesting kind of mix here. They're talking about Russell 2000 outperforming some of these other names, including the NASDAQ 100 and indeed some of these treasuries. So an interesting, if you want to check out that article over there on Reuters, check it out for yourself. We're coming up against, I want to hit on this one really quickly. I touched on this on the Crypto Rundown show this week, but I want to make sure I answered it here because I do believe the question came in here first. It came from Alanist, who wanted to know, are Bitcoin futures truly uncorrelated to equities? And the reason I want to talk about it here, too, is because, of course, we used some of the TWIFO tools to answer this question. We broke down the futures on Bitcoin at CME and compared them to the futures on other products, equities and everything else, so we could see direct correlation. We dialed it back a full year, so this goes back all the way a year. You can obviously extend that analysis if you like, but we did it for a full year to kind of see what's been up. Obviously, this has been a crazy year, some interesting data points in there, and we want to see how all that breaks down. And, the argument for a long time has been, Bitcoin's uncorrelated. Well, the answer is yes and no. And at least for the past year, again, we could extend this for longer, and maybe we will do that to explain this a little bit more. But for the past year, let's look at equities first. And the correlation between Bitcoin and the NASDAQ is certainly not uncorrelated. It's actually fairly correlated. They're at about a 39%. So you can't argue that's uncorrelated. It's not quite a half, but it's getting there. And the S&P is about 37%. So over the past year, Bitcoin and the S&P have certainly been quite correlated, particularly in those crazy moments like middle of March when the huge sell-off was happening in equities, and guess what happened to Bitcoin? It sold off really hard as well. So in those extreme moments, the correlation jumps up. I've said it before, I'll say it again. When it all hits the fan, correlation tends to go to 1. And those are the moments when you really want that correlation to be, that product to be uncorrelated, and it's not delivering, particularly in those moments. So be very cautious if you think Bitcoin and crypto in general are uncorrelated to equity. Let's go out to energy. Also a surprising correlation to energy. RBOB was a 33% correlation to Bitcoin. Heating oil, 32%. WTI a little bit less at about 25%, but still a decent correlation there. Also on the metals front, silver, 36% correlation to Bitcoin. Gold, 33%. The ags, you probably wouldn't assume a high degree of correlation. You'd be correct. All of them are about 19% or less. So you can probably make a good argument that the crypto and Bitcoin uncorrelated to the ags, at least over the past year. FX is a category that's often conflated with crypto. They call it a coin. They think of it as FX. They think of it as a currency. So they often conflate that. Let's see what the correlations are there. And they're all pretty low. Also for the rates category, also pretty low. Everything, the Eurodollar, 2-year, 10-year, 30-year. The highest correlation we saw across all FX and all treasuries was 17%, and that was to the pound dollar to the Bitcoin. So not a lot of correlation there at all. All the others were 15% or less, and some of them negative, obviously, out there in the treasury space. So not a lot of correlation in FX or rates or ags. Surprisingly high, maybe, depending on your viewpoint, correlation in metals energy, and equities. Just something to bear in mind if you're out there looking at Bitcoin as this uncorrelated asset class. At least over the past year, the answer to that has been not so much. And unfortunately, that music means the answer to is this show coming to an end. The answer, unfortunately, is yes. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters, sir. You ably held down the CME Group hot seat today. Hopefully it wasn't too hot, too uncomfortable for you. But if folks are intrigued by all your equity volatility analysis, maybe I'll hit you up on a little bit of TLT or maybe a little bit of gold vol as well. Where should they go? What should they do, sir?
Go to optionbit.com, look under memberships. I cannot promise you a car. Only Oprah can do that.
You're just hung up on this car thing, sir, aren't you?
All I know, 10 years, didn't get a car. That's all I'm saying.
You live in Maine. They don't even need cars. You just go out. You go out to the ocean. You have a kayak. I'll get you a kayak. How's that?
we ride our buggies.
Bikes and kayaks and clam fishing boats is what you guys have up there. Who needs a car in the hinterlands of Maine? Maybe you want to buy him a car. Maybe you want to check out his classes so he can buy himself a car. Head on over to optionpit.com for yourselves, listeners. They talk about a lot of equity vol, which is certainly, I know, near and dear to a lot of you, but also a lot of energy. Metals has been in there as well of late. I think also TLT and others make an appearance or two when they're breaking down the vol out there. So if you like all that fun stuff, optionpit.com, a good place to hang your hat. And we talked about it earlier, Mr. Smith out there, all of the webinars and fun things you have cooking over there in FTSE Russell land. If folks want to check it out for themselves, where should they go? What should they do?
Please reach right out to me, smith@FTSERussell.com. Happy to give you all the information I have, share it with you, send you the links. I'll do the searching for you. Happy to help you any way I can. So I look forward to our next show, and it's great to be on with the guests today, guys. Rock Lobster, always a pleasure to have you guys on the show.
Thank you.
Now he just wants his car, Sean, and he'll be happy. So you guys can arrange that after the show. How does that sound?
Yeah, my name's not Oprah.
And having your guest buy the car doesn't count, Longo. Does not count.
He's the Oprah of this program. He makes repeated appearances on the cover like Oprah does on her magazine. So he's the one. If someone's going to give the car, it's got to be the Oprah. It would be off-brand for me to do such a thing. So if you too want a car, listeners, maybe I'll hit him up about some small cap vol or some webinars. Hit him up smith@FTSERussell.com. Check him out over there at FTSERussell.com as well for the webinars. Give him a follow on the old Twitters as well. @FTSERussell is the place to go. You know where to go for access to this show, access to this great reports, all the great research they do over there as well. CMEgroup.com/TWIFO or /TWIO. That'll get you to the reports. You can also go to the education page where you see links to this fun show as well. And of course, if you like what you hear, keep those reviews coming so new folks can continue to discover this program and indeed this network in these trying times. And on behalf of Mr. Smith and the Rock Lobster and our friends over there at CME and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for listening live, all the fun stuff that you do. Keep it coming. And we'll see you back here tomorrow. Volatility Views back at its old time, noon Central, 1 p.m. Eastern. Then we kick it all off again on Monday with the option block all the way through to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.